Good morning. It is 8 a.m. and I'm calling to order the regular meeting of the Equity, Public and Private Committee of the Board of Investments, today being Wednesday, March 9th, 2022. And before we proceed, Linda, would you advise us of the proceedings and how we're going to proceed this morning?
Thank you, Chair Santos. This meeting is being conducted as a virtual meeting, so I will do a roll call of the trustee to confirm attendance. Ms. Greenwood? Mr. Knox?
Good morning, I'm here.
Thank you. Mr. Jones?
Good morning.
Thank you. Mr. Santos?
I'm here.
Mr. Green? Okay. Mr. Kelly? Ms. Sanchez? And Mr. Kehoe. Okay, staff participating in the meeting include the following: CIO John Grable, CEO Santos Cramen, Chief Counsel Stephen Wright. Investment staff include Esmeralda Del Bos, Ron Sankandwa, and Jeff GM. Consultants include the Makita Investment Group and the Stepstone Group. Trustees, please use the Zoom chat option to be placed in the queue. At this time, we ask all meeting participants to mute their mics until you're ready to speak, and we may now proceed with the agenda.
Linda, do we have a quorum?
Yes, we have Mr. Knox, Mr. Jones, and Mr. Santos.
Okay, good. All right. So at this point, I will entertain a motion to approve the minutes of May 19th, 2021.
So moved. Second.
It's been moved and second. Any amendments, corrections? Hearing none, roll call, please.
Mr. Knox?
Aye.
Mr. Jones?
Aye.
And Mr. Santos?
Yes.
Okay, the motion passes unanimously.
Thank you very much. Next item on the agenda is public comment. Have we received any requests to speak?
We have not.
Okay, thank you very much for that.
You're welcome.
Moving forward is item 4, reports. Analysis of the Global Equity and Activist Manager, Ms. Del Bosque.
Good morning, Chair Santos and members of the committee. Today we'll be presenting an open and closed session analysis on the 3 global equity activist managers. The open session is a report with certain sections redacted in black. We apologize for the oversight and not adding a footnote to denote that. This is the last in a series of 5 global equity topics that we committed to covering as part of our last comprehensive structure review. The structure review described the topics as areas within global equity that warranted further examination with the board. And to date, we've covered 4 of the 5 subjects, including an assessment of the manager's search process, a review of implementation for active management, evaluation of new portfolio management tools, as well as an overview of the currency hedging program. In open session, we will provide a high-level review of the activist mandates, including size, function, and the history of the investments to date. And in the closed session, we'll provide much more detail and focus on their role in LACERA's total fund, as well as examine portfolio fit for the global equity structure. Jeff and Ron, the lead analysts on these mandates, will present the analysis in open session. And with that, I'll turn it over to Jeff to start us off. However, we would like to pull up the presentation. And thank you, Tara, appreciate that.
Thank you, Yasmin. Good morning, Chair Santos and members of the committee and board. I will cover most of the open session presentation, and Ron will go into the analysis. As mentioned, we have redacted information on the slides that we intend to dive deeper in the closed session. Can we move to slide 3, Tara? Thank you. The objective for today's presentation is to evaluate the role of activist managers within the global equity portfolio. Next slide. To set the stage for discussion, this slide provides the role and structure of global equity. The pie chart on the top left shows that global equity accounts for 68% of growth, or approximately 26.9 billion as of December 2021. The pie chart on the right shows a breakdown of global equity portfolio by category. The majority of the portfolio is allocated to passive index and factor-based strategies, which are 61.6% and 20.5% respectively. Active strategies account for the rest of the 17.9%. Activist managers are part of this category, and they account for 3% of the global equity portfolio. Below the pie chart, we listed the objective of the portfolio, which is to provide global market beta exposure with excess return as a secondary consideration. There are 3 subcomponents to achieve that objective. First, the passive index provides a global equity beta exposure. Second, the factor-based strategies provide incremental return with relatively lower risk compared to active strategies. And lastly, active strategies generate return in less efficient market segments, such as non-US markets. From an asset allocation perspective, global equity is 35.7% of the total fund and is modestly over the asset allocation target of 34% as of 2021 year end. Next slide. As you recall, in the growth structure review presented at the December 2020 BOI meeting, the trustees have reaffirmed the current structure for global equity portfolio as outlined on the table. And as Esme mentioned, we have covered 4 of the 5 topics in the past, and today's discussion is the final topic. Next slide. Thank you. This slide provides a brief overview of activist managers. We provided a short definition of activist manager on the top table of the slide. Whereas traditional equity managers that generally seek to understand and evaluate a company's business operation and financial structure, activist managers further seek to actively influence a public company's management and board to adopt structural, financial, operational changes that may improve company efficiencies and potentially leading to increased long-term value. The graph on the left-hand side in the middle of the slide lists some of these strategies utilized by activist managers. For example, some of which you're probably familiar with are suggestions of recommendation and acquisition, disposal of assets, and restructuring. Through these proposals, the activists will try to influence the company's management or board to take actions with the hope to ultimately improve share price. Compared to traditional equity managers, activist strategies have more concentrated portfolio, higher volatility, and higher investment management fees. Next slide. This slide shows a breakdown of the active strategy component of the global equity portfolio. The blue shaded rows denote US strategies and the white shades are non-US strategies. As you can see at the bottom of the table, activist managers Jana, Sebian, and Symphony are a small portion of the portfolio at approximately 3%. Next slide. So given the concentrated nature of activist strategies, allocation has been less than 5% of the portfolio to reduce volatility and concentration risk. Note that LACERA's activist strategies are long only. Our experience with public equity activist managers can be divided into 2 phases. The initial introduction of activist strategies started in 2006. At the time, it was believed that activism provides an opportunity to unlock shareholder value and generate unique return to long-term investors, and in turn may benefit holdings in the passive index. 3 firms were hired in 2006, and the program was dwindled down due to manager terminations and manager dissolution. Given the structure at the time, LACERA believed that activist strategy have potential for value add. Hence, the new search was launched in 2014 to replenish the activist program. This brings us to the second phase. From 2016 to now, we adopted a global perspective on activist opportunity set. The current 3 managers were hired by the trustees in 2016 We'll look at them in more detail in the next slide. Thank you. The activist managers hold less than 40 stocks in total. Given Global Equity's revised objectives, we conducted a review of the manager's fit within Global Equity and the total fund. This slide provides a summary table of the 3 activist managers, including their fund inception with LACERA, market value as of December 2021, initial capital commitment, strategy focus region, and strategy description. To provide a brief summary, Cevian's strategy focuses on European region, targeting companies that have profitable business and improvement potential. Jenna focuses on US companies that are undervalued with potential catalysts for value creation. And Symphony focuses on investing in Japanese small cap companies whose share prices are not reflective of their true business values. The manager's annualized fees are listed on the last row of the table. These terms and fees are unique to activist managers and differentiated from the other managers in the global equity portfolio. Now I'll pass it on to Ron for the rest of the presentation.
Thank you, Jeff. Good morning, Mr. Chair and trustees. On slide 10, we examine portfolio fit and review our activists in context of LACERA's strategic initiatives and goals to move LACERA from allocator to investor. Highlighted below are some of the initiatives that we've mapped out to aid us in achieving that goal. The 4 strategic initiatives that directly apply to our review are enhancing operational effectiveness, optimizing the investment model, maximizing stewardship and ownership rights, and lastly, strengthening our influence on fees and the cost of capital. We would like you to keep these points in mind as we go over the closed session later this morning. Next slide, please. We will now segue into the review of the portfolio fit. Here we have broken down the analysis into 2 periods. The left-hand side of the page covers the period prior to 2019. During this period, the global equity portfolio was managed in 2 separate sleeves, a US portfolio and a non-US portfolio. Additionally, the portfolio's passive allocation was implemented through commingled funds. Similarly, the activist managers, which were hired in 2016, were implemented through commingled funds and alternative-like structures. For example, they have lockup periods, reduced liquidity, higher fees, they lack portfolio transparency, and have no proxy voting rights. The right-hand side of the page covers the post-2019 period, where the board adopted a global perspective and combined the 2 portfolios. Furthermore, the regional passive indices were consolidated into a single separately managed global passive index. Separate accounts enable LACERA to own individual securities and vote proxies based on LACERA's corporate governance and stewardship principles. Other notable changes include a change in primary objectives from seeking alpha to providing market beta, introducing a factor sleeve, attaining more intentional active exposures, and a reduction in investment management fees. We'd like to highlight that the activist managers account for nearly 40% of the total global equity fees, which translates to $15.6 million annually. Next slide, please. Slide 12 looked at initiatives undertaken by LACERA's corporate governance program and the total fund. Since activist managers hire, significant strides have been made by LACERA to enhance stewardship. First, a key focus at the total fund level has been acquiring beneficial ownership rights and being able to vote proxies. LACERA now retains 90% of the voting authority on the global equity portfolio, but of course our goal is to retain 100%. Since LACERA's activist managers are invested through commingled fund vehicles, LACERA is not the beneficial owner of the underlying securities and cannot vote proxies on this account. Furthermore, proxy votes for the activist managers are provided on a lag basis. Activist managers have certain restrictions disclosing their fund holdings and are only required to disclose their ownership once they acquire 5% ownership in a company. Second, LACERA's corporate governance and stewardship principles are applied across the total fund. As it relates to LACERA's activist managers, their engagement agendas may differ from those of LACERA, which could lead to activist managers voting differently or counter to LACERA. A simple example in which activists may vote differently from LACERA is regarding board directorship. LACERA's policy restricts company board directors to holding a maximum of 4 board seats at the same time. On the other hand, activists may not have that restriction. In this case, LACERA would vote against a director with 5 board seats, whereas the activists would vote in favor of that board director. Next slide, please. This slide examines the broader activist manager universe. In summary, activist strategies are not monolithic. They pursue a wide range of strategies to unlock value and return value to shareholders. Some strategies are short-term in nature and focus on financial engineering and shorter-term returns. Others are more longer-term focused and place emphasis on improving firm operations. Some of these strategies may not be consistent with LACERA's longer-term perspective. Next slide. On this slide, we review performance and risk statistics for the 3 activist managers. From the chart, you can see that the 3 managers have outperformed their respective benchmarks since inception. However, from a risk perspective, the returns have come with higher volatility as measured by standard deviation and tracking error. We will be reviewing our analysis of these statistics further in the closed session. Next slide. Here on slide 15, Jeff already covered materials on this slide. However, the green section highlighted at the bottom of the table shows the % allocation to activist managers. That concludes our prepared remarks for the open session. We are happy to answer any questions at this time.
Point, I don't see any request to speak, so let's move forward to closed session.
Great. Members of the committee, hello again. As I previously mentioned, for the closed session, we will be providing more detail on the activist program, specifically the material.
Should we make sure that we have that we're in closed session before we start?
Yeah, we're not in closed session.